Hello, everybody. Welcome to this daily currency call, where we share our analysis and ideas for a specific currency for each day. So today is Thursday. We'll be doing the yen and gold. So before we start the session, to help me with this poll, is it your first time here? So this webinar is going to be very beneficial to both the long-term investors and short-term traders. We will be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. So just a quick look at the poll. Yeah, we do have quite a few first-timers here. So do help me with the next poll. How did you get here? So just a quick introduction about Jin. So Jin is the founder of LCMS Traders and Forex Briefcase. He teaches members of the LCMS Traders Club on how to trade FX. And for Forex Briefcase, he trades an account with more than US $12 million on a daily basis for his managed account clients. He is also an international speaker where he speaks in countries like Hong Kong, UK, US, Australia, Malaysia, Vietnam, Indonesia, and of course here in Singapore, sharing his views about the FX market. So just a quick look at the poll. Yeah, I do see a lot of you coming in from the Traders Club and also the Telegram channel. So I just want to take a minute to share what the Traders Club is all about. So this is our private group on Facebook where we teach, guide, signal, and coach you to be a better and more profitable trader. So this is the place to be regardless of whether you are new, experienced, part-time, or full-time trading. If you have joined us from the Telegram channel, you may find this signal familiar. You have been enjoying our trade signals absolutely free. The question you might have here is that we have told you when to get into a trade, but you do not know where to exit. In the Traders Club, we not only give you these signals earlier than the Telegram channel, we also tell you the strategy behind the signals. And actually guide you on where to exit, so that in the long run, you not only earn from the signals, but you also learn how to trade better. If you require some coaching, if you are new to trading, we have members only live Zoom session on Mondays and Wednesday evenings to run through trade ideas, update you on recent economic developments, and also on Wednesdays, we do live trading session. So real trades entered live, we can trade together. This is also the best time to pick Jin's brain on pretty much any trading related questions you might have. Lastly, we have a wide range of analysis, daily currency watch lists, here currency correlation, weekly currency correlation table, and breaking news analysis, tutorial videos. If you are new to trading, opt in to this 4-day course and go through the 4 days of videos to get started in Forex trading. Yeah, so to join this group, it's a paid subscription of $199 a year, which is less than $1 a day. If you are facing any uncertainty in your trading or taking any risk on your trades, you need to join the club to get some guidance towards profit or some coaching to improve on your confidence and strategy immediately. So yeah, trading can be lonely, but with a close-knit community ready to share, trading can be enjoyable and definitely profitable. If you haven't already, make sure you click on the link to join now. Yeah, so with that, I'll pass the time now to Jin for the currency call.
All right, good morning. Just want to make sure that's on. Okay, so good morning. Thursday today, 4th of March. Let's look at the yen pairs and also gold. Getting straight into it. So if you're joining us on Facebook, the link is there. Jump onto the Zoom call with us. We have the chat going on Zoom. And also, if I know what kind of trades you are more likely to get into, or the kind of trades that if you keep sharing with me what kind of trades you look at and your trading style, I am actually more able to, cater a bit of advice towards you, like what I've just done for Si Yun there. I know she loves trading the euro dollar. I've seen her charts, or we've talked about her charts before. I know what levels or what lines she has, which is that 1.2053 support level. And at this point right now, the euro dollar on the H4 time frame does look like it's breaking that. So, I've got that on the chat there. Possible trade idea coming out for the euro dollar. But we're not talking about the euro dollar today, talking about the yen. So, looking at the news, jumping onto forextradingasia.com, look at the news, the analysis is all there. So, if you want to find out anything about any currency pair, any of the major currency pairs, it is there. Look at the economic calendar, scroll through, looking for the 4th, which is Thursday. Okay, so Thursday we have it here. We've just had some retail sales number come out just come out at 8:30 this morning. For Australia was 0.6%, came out at 0.5. But that's one of the reasons why I don't pay too much attention to the retail sales numbers as economic data, because we didn't see that much of a reaction on the Aussie dollar. So what's going to move the yen pairs, the US yen, the euro yen, the pound yen? It would probably be a lot more of the US dollar data at this point. We spoke about the euro dollar, we spoke about the euro news, we spoke about pound extensively yesterday. Now looking at the US dollar data, we have some jobless claims numbers, weekly claims numbers, 730K, expected 750. So probably not a big change there, but everything leads up towards, Powell is speaking on Friday morning at 1 a.m. Singapore time, GMT +8. But everything leads up towards the non-farm payrolls tomorrow. Non-farm payroll at 9:30 tomorrow, Friday night. Average hourly earnings expected to stay at 0.2%. Payroll is supposed to look like it's going from 49K to 182K. So looking at a bit of an improvement there. And unemployment rates holding steady at 6.3%. So as I shared with you yesterday and all the Traders Club members on Monday as well, non-farm payrolls this month looks like it might be a bit of a non-event. It looks like it might be a bit of a non-event with not much change on inflation, on earnings and inflation numbers there, and also on unemployment rate there. And going from 49K to 182 doesn't seem, although it's a good big number jump, but it doesn't seem like it's going to change the overall perspective of how the market is. So I don't think it's going to be a big price mover at this point, but that might be a good thing. That might be a good thing because this could actually lead to a bit more of a consistent move in that trending directions, which I will show you quite shortly. Okay, so remember what we're talking about is that consistent move following that trending scenario. So looking at the charts here, this is the Aussie US. Let's not look at the Aussie US. Hang on. Okay. The US yen. Okay, so Traders Club members, if you cast your mind back a couple of days, on Monday, I was telling you that right now we are waiting for the US yen. This was Monday here, for the US yen to slowly gravitate up towards that 106 or 107 level. Okay, 106.99. So it's a 107 level. As it moves towards this point, this is the perfect setup for leading up towards that non-farm payroll. Why I say that is because regardless of whether the non-farm payroll is going to be a good news or whether the non-farm payroll is going to be a bad news, at this now, I like it to be 1.7, okay. At this now support resistance level of 107, we have the opportunity to have that both buying up or selling downside potential. Okay, so this is where, I'll zoom in one more so it's a bit easier to see. So this is where you could actually be looking to set orders, maybe at about 107.20 for that upside move towards 108. So you're looking at 107.20. You could be looking at a 30 pip stop loss for a good 90 pip take profit level. 107.20, 30 pip stop loss, 90 pip take profit level. Towards the upside, you have a risk reward of 1:3. In a worst case scenario, non-farm payroll comes out terrible, and then we see it turning back down. US dollar weakness comes around below 106.90. We could again be looking at 30 pip stop loss and a 60 pip, 70 pip take profit level. You have a 1:2 risk reward ratio there. What you'll notice right now is that although we are on Thursday, I've started talking about non-farm payrolls already, primarily because I don't think today is going to be a big price movement day. Of course, I could be taken by surprise, but it probably will sit there, fluctuate within this area before we see the movements on Friday. So, I'm looking at maybe on Friday that possible upside move or below 106.90 for that downside move towards that support level. At this point right now, it will be a little bit too early to put in any pending orders, whether to buy or to sell, because that bounce around, that move in this support/resistance region will probably trigger any orders if you had it there. So I would say, sit it out, wait for it, let it move until Friday, put in the orders, and then you can see either that upward move or that downward move for the US yen. Fair enough, happy with that. Looking at the Euro yen is going to be a little bit different. Euro yen doesn't have that two-side move. Okay, Euro yen doesn't have that two-side potential move. So one reason why I put it in the chat and I was looking at the euro dollar in the first place is look at the euro dollar here. It's had that big move downwards, bounce back up. Now it looks like it's trying to break that 120.53 level. If it does break below this point, we could probably see it test 119.63. And if it does move that downwards, I'll draw that line there. If it does break below 120.53 and move towards 119.63, then the euro yen could see that downward move as well. It could see that downward move. But for the euro yen, we're probably looking at that move there, 128.80, about 128.80. Your stop loss will be a little bit bigger here, about 80 pips stop loss for that 140 pip take profit level. So not quite 1:2, slightly more than, well, quite a bit more than 1:1, but not quite 1:2 on the risk reward ratio there. But this would be driven by euro dollar. This move downwards will be driven by euro dollar. Given the right opportunity, we might actually see this test upwards again before turning back down. If it does test upwards and turn back down, then even better, you can have a tighter stop loss for a bigger take profit potential. Take profit potential again back at that support level. I will still be looking for both either that first level at 128.30 and the next one at 127.29. All right, so for the euro yen, only on the downside, assuming that resistance of 129.51 holds and pushes price lower. So finally, looking at pound yen. Look at pound yen. This level of 150. I'll move this slightly up so we get a nice round number. This resistance level of 150 has held very strongly. It's gone straight up, hit, turn back down, gone straight up, tried to breach that region, turn back down strongly. And with the last time we spoke about this last week, I said that I was looking for that reversal pattern, and it did happen. Came almost towards the take profit level, came all the way down. Right now, looks like it tried to test that 150 level again. I don't think it'd be ready to sell at this point because looking at the pound dollar, it's probably going to sit across a little bit, probably going to test that 140 level again. So with the pound yen, I think that we might actually see it it sit across slightly before possibly turning back down. Sit across slightly before possibly turning back down. I think that it might actually test 150 again. This is actually a good thing because if it does sit across or it does move up slightly, it gives you the opportunity to keep your stop loss a bit tighter. In this case, volatility on the pound yen is a lot higher. So you have a stop loss at about 100 pips upwards for that 200 pips or 250 pips downward take profit level. So risk 100 pips, take profit at 250, 1:2.5 risk reward ratio there. Looking quite reasonable, but in this scenario, I would say best recommended is to size down, right? Because at 100 pip stop loss, it would probably throw your risk management systems a bit haywire. So I would say, if you're jumping into that reversal, that counter trend reversal, then look to size down, take that opportunity with 100 pip stop loss and about 250 pip take profit level towards 146.64. Okay, so US yen, both upside and downside potential depending on the non-farm payroll numbers. Euro yen, most likely downward move dependent on the euro dollar, and then the pound yen, I think that 150 is going to hold. The resistance of 150 is possibly going to hold for that downward move, that counter trend move that we saw last week as well. So finally, looking at gold at this point, when I spoke about it last week, I said that it was probably going to stay within that 1773 and 1845 region. Didn't do that. It broke 1773 and went significantly lower. At this point right now, why did it drop that much? It's primarily because of that short-term US dollar, or that short to medium-term US dollar strength come around. We saw that move away from reserve back into the US dollar there. With that move here, let me zoom out a little bit more. Looking for another level, we could see 1682 right there. At this point right now, I think that we might see slightly more downside. I think it will probably come down towards 1682, possibly breach 1682. Okay, so I think that it might come down and possibly break below 1682. If it does do that, I don't think you'll get to 1538. I think 1600 will probably be another level. So the main thing to consider when you're looking at gold is it forms a very strong trend. It sits around a lot and it forms a very strong trending scenario when it develops. So this downward move could come lower, break 1682, possibly even reach 1600. But what to do at this point for me, I'm not looking to sell gold at all. I'm looking for buying opportunities. I'm looking to see how low can it go and then start accumulating buying opportunities, especially for gold. So went through a lot of different currency pairs. If you have any questions, please feel free to put them in the chat quickly. Or if you're Traders Club members, ask the questions in the club. Be more than happy to get back to you there. With that said, I'll pass it back to Jinwei.
All right, thank you, Jin. I've just posted up a couple of links in the chat. So subscribe to our YouTube channel for our daily recordings, Forex Signals Telegram channel, Traders Club link if you need support and help for your Forex trading. And of course, if you need managed account service, check out forexbriefcase.com. Yep, so that's the end of the session today. We will see. Oh, there's a question. What's the impact of the bond yield upward movement? Jin, you want to answer that?
No, you can. Okay. So we've seen some movement. We've seen a lot of impact on the bond yield upwards move. What we've seen, but it has not been very. It hasn't had a very long-lasting impact, right? When we saw 10-year yields increase significantly. We saw that strength come around, but then after that, it just reversed back again. So it really depends on what kind of trades or what kind of trading style you engage in. If you're more short term, if you are, well, short to medium term, and I think most retail traders are short to medium term, very few are long term. And when I'm talking about long term, I'm talking about 6 months and beyond. So the bond yields are talking about super long term. So if you reflect it back towards your trading style, then it shouldn't impact too much. You can take that opportunity to take advantage of short-term speculative moves, but in the overall scheme of things, then you are still looking at, based on your trading style, I'm still looking at that medium-term moves, which we have seen it reverse back into the existing trending scenarios that we have seen even before bond yields have jumped significantly. Hope that answers your question there. US index looks like behaves similar to the Euro US trend. That's possibly quite true because the US index, a big proportion of the US index is made up from the US dollar, right? The US index is a basket of currencies, based on a basket of currencies, and most calculations have considered the euro dollar as about 40 to 50, some have even added at 60% of the US index. That's why you see a very close correlation for the US dollar index with the euro dollar. But correlation doesn't mean it's always going to happen. Just bear that in mind. So with that, I think we'll call it an end.
Yep. So see you guys tomorrow for the Friday session on Canadian dollar and Bitcoin. So that's the end of the session. See you guys tomorrow. Goodbye.